Will 2023 be the year that the best vegan stocks make a big comeback? Ingredion. Its ingredients are the secret behind innovative food. Hain Celestial Group. The company is becoming more focused, improving the outlook of Hain Celestial Group stock. NGP Ingredients. This behind-the-scenes food and beverage company's branded spirits business will change the trajectory of its stock. Let's dive in. Here are the 3 best vegan stocks to buy for 2023 and beyond. Welcome to Timely Investment Research. There was a time when plant-based burgers and related food products were all the rage on Wall Street. The business news media heavily covered the best vegan stocks to buy. Many pundits talked about the potential future initial public offerings of rising stars within the sector, such as Impossible Foods. Many believed plant-based foods were a license to print money. But, unfortunately, the industry's bold predictions turned out to be more sizzle than steak. The IPO market has slowed, and investors' demand for vegan stocks appears to have fallen off a cliff. Only the most ardent supporters are talking of the industry these days. It seems that it is in a deep freeze, much like the one that cannabis has faced, only worse because the vegan sector is smaller than the cannabis space on a global scale. According to one estimate, the plant-based meat market will be worth $15.7 billion by 2027. Another forecast predicts that, in the same year, the cannabis market will reach $82.3 billion, more than 5 times the size of the plant-based meat space. Even back then, in December 2019, you could see that a full-scale exodus of meat eaters to veganism wasn't going to happen. More than 3 years later, I'm tasked with coming up with 3 vegan stocks to buy for 2023. Here are my choices. Number 1. Ingredion. Ingredion is the largest of my 3 vegan stocks to buy. It has a market cap of $6.7 billion, putting it solidly in the mid-cap stock camp. Food companies come to Ingredion when they need ingredients to help their products fly off the grocery store shelves. Based outside Chicago, Ingredion has more than 19,000 customers spread across 120 countries worldwide. Its ingredients are made in its 46 manufacturing facilities on 5 continents. In third quarter, its sales climbed 15% versus the same period a year earlier to $2.02 billion, with an operating income of $182 million, up from $172 million in third quarter of 2021. The company's specialty ingredients segment generated 33% of the firm's overall revenue in third quarter of 2022. One of the growth catalysts for the specialty ingredients division is plant-based proteins. Using pulse-based proteins such as chickpeas, lentils, fava beans, and peas helps manufacturers create products with more protein, dietary fiber, and better texture. In 2015, specialty ingredients accounted for 24% of the company's revenue. By 2025, Ingredion expects the unit to generate 40% of its $8 billion of revenue. The 7 analysts who cover Ingredion have an average rating of overweight on the shares with a mean price target of $103.60 on the name, slightly above where it closed on Friday. Based on the midpoint of its guidance, the company is calling for full-year earnings per share, excluding some items, of $7.18. Its shares trade at a reasonable 14.3 times its earnings. It's a relatively safe way to lean into the vegan and vegetarian movement. Number 2. Hain Celestial Group. I've been a fan of Ives veggie cuisine products since I gave up meat about 7 years ago. Of course, it helped that Ives, a maker of plant-based snacking and meal options for vegans and vegetarians, got its start in Canada in 1985. I especially like Ives fake bacon and fake bologna. Hain Celestial Group bought Ives in June 2001. At the time, the latter firm was generating $50 million of revenue, with most of its sales coming from grocery stores and mass-market retailers. The acquisition was part of former Hain CEO Irwin Simon's quest to make the company a global powerhouse in the healthy, natural food sector. Hain, however, didn't quite accomplish that goal, and Simon was pushed out in June 2018 after founding the company more than 25 years earlier. He's now the CEO of Tilray Brands. Mark Schiller took over from Simon, spending the last 4 years selling some of the company's units. Schiller stepped down at the end of December, but only after selling its Westbury Natural brand division, which had spent 25 years under the Hain Celestial umbrella, to the makers of Bush Beans in December. Under Schiller, Hain became more focused on the North American market. His successor, Wendy Davidson, has been an executive for several large packaged goods companies, including Kellogg, McCormick & Co., and Tyson Foods. Down more than 50% over the past 5 years, Hain Celestial Group stock is the perfect contrarian play for 2023. Number 3. MGP Ingredients. MGP Ingredients had an excellent year in 2022 as its stock gained 25%. In April 2021, MGP bought Luxco, the maker of spirit brands such as Ezra Brooks, Rebel Yell, and many others, for $475 million, continuing its efforts to acquire higher-margin businesses. Before MGP acquired Luxco, which added approximately $200 million to its annual top line, it had two main businesses: Distilling Solutions and Ingredient Solutions. The former unit makes distilled spirits for other manufacturers. The latter division creates specialty wheat starches, wheat proteins, commodity wheat starches, and commodity wheat proteins. In third quarter, MGP's sales rose 14% year-over-year to $201.2 million, as the sales of all three of its operating segments climbed and its operating income increased 2% to $33.2 million. For all of 2022, it expects top-line revenue of at least $765 million with earnings before interest, taxes, depreciation, and amortization, excluding some items, of $162 million. The firm predicts that its earnings before interest, taxes, depreciation, and amortization margin will come in at 21.2%. The company's gross margins will increase as inflation moderates, causing its profits to rise. While the Ingredient Solutions business is a small part of MGP's sales, it provides the company with greater diversification. With MGP trading at 25.7 times its cash flow, the stock's price-cash flow multiple is lower than its 5-year average of 29 times. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.